What's up guys, it's Nathan here. Today we'll be discussing the recent proposal by the New South Wales Labor government to make home ownership more accessible for first home buyers by abolishing stamp duty as well as offering higher concessional rates. We'll dive into a unique and surprising trend in the Australian property market where new listings have dropped significantly during the traditional peak listing window in 2023. So let's dive in. The New South Wales Labor government is looking to make home ownership more accessible for first homeowners, and with their recent win, stamp duty will be completely abolished for first homeowners purchasing a property worth up to $800,000. Moreover, a concessional rate will be offered for first homeowners buying a property up to $1 million. Now, this is a great change and has effectively increased the current threshold in New South Wales, which was previously $650,000 where there's nil stamp duty, up to $800,000. Now, other states should follow in New South Wales' lead. Here in Queensland, for example, the threshold is $500,000, with property prices increasing as much as they have in the last number of years. $500,000 is near impossible to purchase a house, and for a unit, you've got half a chance. But these rates should really increase with CPI, especially because stamp duty is a large component in a lot of cases of first homeowners deposit. Give us your thoughts down below. Do you think the concessional rate for stamp duty in your state should be linked to CPI? Because this is one of the biggest changes we've seen in stamp duty concessions for a long period of time. It almost feels like it's been too stagnant, and this should have been something that was looked at a lot earlier. Now, according to independent modeling by the Parliamentary Budget Office, within the first 3 years of implementing these changes, an additional 27,000 first homeowners will completely avoid paying stamp duty. Additionally, 18,000 first homeowners will be eligible for significant discounts. This will mean an estimated 95% of all first homeowners in New South Wales will either pay no stamp duty or a reduced rate when purchasing their first home. And if you find value in this video, please consider hitting the subscribe button as it really helps out the channel. And a big thank you to all our subscribers for your support. It inspires us to create more content we hope you enjoy. Now, the New South Wales Labor government is also focused on providing social housing for struggling Australians. The plan to introduce a mandatory requirement that allocates at least 30% of all homes built on surplus government land for social and affordable housing. Now, let's dive into a unique and surprising trend in the Australian property market. Every year during the first half of March, Australia experiences a surge in property listings, but 2023 has proven to be an exception to this. Let's look into the reasons behind this shift and explore what it means for the housing market. First, let's discuss the traditional peak property listing window in Australia. Every year, during weeks 9 to 11 on the calendar year, there's typically a surge in listing activity. This window is an important indicator of the seller sentiment and the general market confidence. However, in 2023, we've seen a significant drop in new listings, with sellers erring on the side of caution. Let's look at the numbers during week 11 March, which was from the 11th to the 19th of March. There's 8,722 new listings added onto the market, which was a 27% decrease compared to the same time last year and 21% below the previous 5-year average. So far, new listings in 2023 have just been tracking at 18% below 2022 levels. This lower than average flow of fresh stock is likely to have a significant impact on the housing market. You might also be wondering how this reduction in new listings is affecting housing values. Interestingly, CoreLogic's daily home value index has shown that in some cities, a lack of new stock availability has actually stemmed the decline of values. In Sydney, for example, house values have increased by 0.9% over the past 28 days, even as the volume of new listings fell by almost 40% year on year. We can see a similar trend in Perth, Melbourne, and Brisbane, where housing values have either edged slightly higher or have stabilized. Historically, the surge in new listings during weeks 9 to 11 is followed by a gradual decrease in listing activity leading up to Easter and the cooler months. However, this year it seems that the second wave of listings is unlikely. Activity across CoreLogic's RP data platform, where real estate agents generate reports to prepare properties for sale, has consistently tracked below levels over the past 2 years and is now trending downwards. This indicates that fewer properties are being prepared for sale. In fact, the year to date has seen 14.9% fewer real estate agent reports generated compared to the same time last year. So what does this all mean for potential buyers and sellers in the Australian property market? For sellers, this may be an opportune time to consider listing your property, as lower supply of new listings could lead to an increase in demand and potentially a higher selling price. On the other hand, buyers may face more competition and less choice due to the scarcity of available properties on the market. The new listings trend vary from region to region. Most areas of Australia are recording lower than normal fresh listings, particularly the larger capital cities. The lowest amount of new stock year to date relative to the previous 5-year average can be seen in Sydney, Melbourne, and Brisbane. To give you a bit of perspective, here are the numbers. Sydney new listings are 13% below a 5-year average and almost 23% lower than the year before. Melbourne is 12% lower than the 5-year average and 23% lower than last year, and Brisbane is 17% lower than the previous 5-year average and almost 20% lower than a year ago. It appears that prospective vendors in these cities are choosing to wait out the downturn, preferring to delay their selling decision until market conditions improve and the sense of certainty returns. They also might have fixed in at ultra low fixed rates, as there was a time where you get a 4-year fixed rate at 1.99%, which means they don't have any pressures to sell due to all the rate rises that have been happening. However, it is important to know that not all capital cities are following the trend. In Hobart, Darwin, and ACT, new listings are actually higher compared to the first 11 weeks of the previous year. In Hobart, new listings are up 6.2% on the previous 5-year average and 8.9% higher than a year previous. Darwin also is up by 7.5%. In ACT, new listings are 2% higher and remain almost 11% higher than they were a year ago. And remember to like, share, and subscribe to stay informed with all the latest property and finance news. The standoff we're seeing between vendors and buyers will play a crucial role in the performance of this year's housing market. Since September of 2022, there has arguably been a buildup of pent-up supply as prospective vendors delay their selling decisions. This is frustrating for buyers who face a shortage of options. However, any signs of rebounding in new stock on the market could trigger renewed downturn pressure on the housing values, unless the increase in listings is matched by a corresponding uplift in buyer activity. So the changes that'll be brought on by the New South Wales government to abolish stamp duty for first homeowners, as well as offering concessional rates, could make home ownership more achievable for many Australians. And as for the surprising trend in the property market, the decline in new listings during the traditional peak listing window of 2023 could have various implications for both buyers and sellers. Did you know here at Hunter Galloway, we're mortgage brokers that get loans approved. So if you're looking for a great mortgage broker to help buy your first home, buy an investment property, or even refinance, get in touch. We can help. Call us on 1300 088 065 or visit our website huntergalloway.com.au. We'd love to help. And guys, as always, thanks for watching.